Yeah, can you hear me?
Yes, I can hear you. Are you able to hear me? Can you hear me?
We
Yes,
seem to have
we can
lost
hear you.
Eliya.
We can hear you, Eliya.
Okay, let me just, Eliya, good afternoon. Are you there?
Afternoon, thank you. Can you hear me?
Okay, let me just get our IT team to assist us with getting Eliya. Eliya, can you hear me?
I can hear you. Can you hear me?
Can you hear me?
Yes, I can.
Oh, okay, great. All right, welcome to today's
Thank
town
you.
hall.
Thank you so very much. I hope I'm audible.
Yes, you are.
Good.
Okay, so today you're talking to us about retirement investing and future long-term financial planning. Please take us away. What exactly are we talking about here, and how does one prepare for your long-term financial well-being?
Thank you so very much. So today's topic is actually interesting because it cuts across all of us. So there's nothing like I'm an entrepreneur, no, I own a big business, or I work, or I'm at school. There is always something that we can do in order to prepare ourselves for tomorrow. And we are also cognizant of the fact that, at the moment we are talking about sustainability. So we are also worried about the things that are surrounding us, our family members. So even as we prepare, we want to make sure that everything around us, is taken into account. And in this case, we want to ensure that we are financially independent so that we do not bother our relatives. We need to be self-sufficient financially and be able to do all these basic things. So quite an interesting program. I think it would be nice to share a few facts with the audience. Thank you.
Okay, that's great. Thank you so much for that introduction, Eliya. You can go ahead and just share your slides. So while Eliya is doing that, preparing to make his presentation, I'd urge everybody to take part in the survey. The survey link has been posted in the chat section. Like I mentioned earlier, it's just a survey to give us some feedback, to offer feedback to the Commission on our awareness programs. We just want to know where we are in terms of awareness levels and how we can do better and what topics you'd like us to focus on going forward.
Okay, meanwhile, you can confirm if you're able to see the presentation.
Yes, we can see.
Thank you very much. You let me know when to go ahead.
No, you can start. You can start. I'm sure in the background, everybody else will be doing the survey, but you can start.
Okay, great. Thank you so very much. So then we are discussing a comprehensive guide to retirement investing and long-term planning. As we heard, my name is Eliya Mvula, part of Capital Market Master Plan Secretariat here at SEC, as well as a pension analyst at Pensions and Insurance Authority. So let's get in it. What are we discussing today? We want to basically see the Zambian financial landscape. Then we also just want to break it down, the theme that we have for today. And we also want to see how important it is. Then we'll go deeper and just look at the core principles that we need to be aware of as we prepare for retirement, as well as long-term financial planning. And we'll also have a glance at other African countries in terms of savings and investment, and just a little bit of investment options. And maybe we can also provide some step-to-step guide according to age groups. I'm definitely sure we have different age groups in here. So everyone is catered for. Then I'll provide you with a bonus slide, a checklist that you just need to have. Then we should be able to conclude. So then in terms of the landscape, in the financial sector, this we usually repeat most of the time. We just want to make sure that we are moving at the same pace. So in the financial sector, you have three financial regulators. You have the Bank of Zambia, which basically looks at the banks and the non-banking, bureau de change and things like that. Then you also have the Pensions and Insurance Authority, which looks at the pensions industry as well as the insurance industry. Then you also have the Securities and Exchange Commission, of course, looking at an important aspect of the capital markets. And this market is definitely important. Just as it suggests itself, no big deal. A market is where people meet to buy and sell. But in this case, we are talking about the capital itself. Great. Now let's just remind ourselves with the concepts that we have. We have retirement investing and we also have long-term financial planning. What basically are we talking about? So when you talk about retirement investing, you are simply confined to creation of wealth for retirement, okay? That is obviously for people who are in gainful employment and have a plan in relation to a pension scheme. Then also it involves having investment vehicles which are different. Of course, you have shares, you have bonds, you have unit trust, annuities and things like that, in which the funds are put in to ensure that they are able to grow and provide you with a stable income after retirement. So the main issue here is that your goal, you're trying to secure your income in retirement period. So an example which I thought of, which I would give, is that despite that I've put a 10% there, you find that contributions vary amongst different employers who've got pension schemes. So it ranges maybe from 5% to about 20-25%. And that is basically on the part of who? The employer. Then we also have another term, long-term financial planning. This is another interesting one. But just to distinguish the two, for the long-term financial planning, this one is actually broader, okay? This is a broader aspect, and we are looking at the entire financial life of an individual over several decades. So this includes retirement investing, which we are basically discussing. It also includes debt management. It includes estate planning. It includes insurance, things to do with health, life, property, motor vehicles, and things like that. It also includes savings for children's education, building an emergency fund, and things like that. So as you are already able to see, retirement investing is simply a subset of long-term financial planning. So we could even say that if you are able to plan for your long-term adequately, you should be able to have planned very well for your retirement investing. So we move on. So now we want to see the relevance of our discussion today. Why is it important, what we are discussing today? And by the way, I want to assume that maybe all of us will belong to some religious circle, and also that you may likely actually have a religious holy book, if I may call it like that. Yeah, in the physical form, maybe at your home, but also where you are with your laptops or phones, you may actually have that holy book. But you agree with me that every time you go to congregate or to gather with others to go and listen to some people giving speeches and things like that, you get refreshed. So what am I trying to say? What I'm trying to say is that just like King Solomon said, everything that is under the sun has happened before, and there's nothing really different, okay? So then what we are discussing here are things that you've already heard, most likely. But then the critical issue is that we need to keep on reminding each other for us to ensure that we keep on doing what we are supposed to do in order to prepare adequately for tomorrow. So then why is this topic relevant for today, for all of us? Let's talk demographics, okay? I picked an aspect of life expectancy. Truly, life expectancy has been increasing here in Zambia, all right? And with an increase of life expectancy, in Zambia, maybe around 61.7% as we speak. It simply means that you now have an addition of 20 to 30 years of retirement planning that you need to do. Now, this is very critical, even though it looks simple, because if you are able to live longer, it simply means that you need more savings. Okay, so that is why this topic is very important, because life expectancy is increasing. Health facilities are improving, meaning we are being taken care of very well. Financial milestone, that is another aspect which is advantageous. So we are saying that retirement is a financial milestone. So it's not a fixed age where you have to sustain your lifestyle with simply a paycheck, but you are actually saying that you are living in it. It's done over a period of time. That's why this is very important. And another important aspect is that if you're able to plan adequately for your retirement, as well as long-term financial planning, you'll be able to see that you have a peace of mind. And a peace of mind, colleagues, it reduces stress. Okay? Sometimes when you're stressed, others get fat, others get slim. But if you have a peace of mind, you have no stress, and you'll be okay. All right. So just by having a peace of mind, you'll be able to even produce positive results wherever you are. The things that you touch will be able to be positive. They'll have a positive impact on even other things that you are trying to do. So positive trickle-down effect. That's why this topic is very important. Another aspect has to do with inflation protection. Okay, fine, we are able to see inflation going down, but still, it is still high. So what we are saying here is that if you are able to have long-term investments, which could be in shares, bonds, or real estate, this will be able to help the purchasing power of your funds to actually be stable. You'll be able to maintain your purchasing power, okay? The power that your money is able to buy. If your 200 kwacha is able to buy millimil, with long-term investing, the 200 kwacha will still be able to buy millimil the following day, because you are able to maintain the purchasing power. It's able to keep up with the cost of living. Then also there is an aspect of risk management. So you are able to actually spread your risk across different assets, entirely ensuring that you are able to also protect your assets from market shock. And this is very important, because once you're able to do risk management and diversify, then you'll be ensuring a balanced, safe, and growth of investments. Another important aspect why this topic is very, very critical today is on the tax benefits, okay? In terms of pension schemes, private pension schemes, you will notice that there's a tax benefit on the contributions as well as investment income, save for withholding tax. And that is just a small amount. So you really enjoy almost the entire investment return that you are making. So this is why this topic is very important today. So let's proceed to the next page. Yeah, let's proceed to the next slide. So now we quickly want to look at the core principles of retirement, as well as long-term financial planning. There are certain important issues that we need to take into account, okay, for us to ensure that we achieve the issues to do with retirement investing as well as long-term planning. Issues of starting early is very, very critical, and it should not be underestimated. So there's nothing like I'm at school, I'm still at the college, you can always start. And the kind of starting, you always start small. Okay, you start small, little contributions. Over time, they'll be able to grow exponentially. Okay, so if you see our colleague who is trying to run, he's actually quite focused. Okay, he has a starting point. Sometimes people will tell you that you can't get a mango from a mango tree, especially if the tree is quite long. You need to climb. You climb from the base. You don't climb from the top. So we all have to start small and start early. The second important issue that you have to do is to set clear goals, okay? So you need to define yourself, what you understand by retirement age. Normal retirement age in Zambia is 60 years, right? Yeah, it used to be 55, now it is 60. So there's early, normal, as well as late retirement. So you define, when would you like to retire? Others retire at 40 years, others at 50, others at 60. That's what their goal is. And there's nothing wrong with that. You also need to define your lifestyle. Healthcare needs, very critical, very, very important. Okay, so when you're able to set clear goals, these will be able to help you to get to be focused and also to know how much you need to save. Then in everything that you're doing, you need to remain consistent. You need to save consistently, okay? And what is even more interesting now with the coming up of AI, which we cannot rule, it's very critical, we need to take it into account, is that you can actually even automate your savings, okay? In case you are forgetful, you can actually automate so that automatically, you know, the savings are done before you're even able to touch your money when you get paid. Another aspect of core principle, something very important that we need to take into account is diversification of investments. We need to spread the risks across assets. And what I like about this one, when we say diversify, we are also saying that these have to be diversified even geographically. And when I say geographically, I mean that outside Zambia, okay? Even outside Zambia, you can spread around among its provinces, but also outside Zambia, then you're doing a very good job. Because if anything was to happen in one country, if your investments are well diversified in other countries, then you'll be hedged. So that is very, very important. Let's continue and see the other aspects. The long-term focus. Most of the time, we want things to be done very quickly, okay? Within a shortest possible time, you achieve your objectives, but that's not the way long-term investment planning works. This works over a longer period of time. So you need to avoid short-term distractions, okay? And look at the bigger picture that is coming ahead. Stay focused. Also, the other important issue that we all need to do is to ensure that we manage debt wisely. So we are not saying that debt is bad, but what we are saying is that you need to avoid high interest debt that can actually erode your savings, which you've already had worked for, and can actually have negative effects on your long-term planning. So this is very important. You can use debt to grow your wealth, but also you have to ensure that the debt that you're getting actually goes to the intended use. Otherwise, it may be detrimental to yourself. Then also, we want to ensure that we are all embracing the aspect of insurance, okay? Insurance, I think a week is going on. There's so much talk about insurance. And so what we want to do is that we want to protect our hard-earned wealth through the use of insurance, and this is planning to gather our assets and ensure smooth asset transfer. So when we talk about insurance, it gives you a peace of mind. Okay, so you have safety, you think of security, okay, and you think of protection, and you'll be confident in whatever you are doing. The investments that you'll have made, if they are insured, okay, the properties that you have built, if they are insured, even if a house was to be burnt down, at least you'll be, taken back to the position that you were, if not even better. So insurance is very, very critical as you plan for your long-term future. Another important aspect is on the review and adjustment. This is not concrete in stone. Things have to be reviewed every now and then whenever time allows, and depending on the factors surrounding you, you should be able to change your plan depending on how the economy is moving. So that is very important. And also to realize that we may be professionals, quite all right, but then there are those professionals who are authorized. For example, the Security and Exchange Commission as authorized brokers, okay, investment brokers who are able to give you the advisory that you need. They are able to walk you through in terms of buying shares, how you can buy shares. They are able to monitor the investment that you have made. So if you are able to seek professional advice from authorized people, then definitely you are on the right path. Okay, these people are able to tailor-make the investment according to the way you want it and the circumstances. So very, very critical. Still, even on the pension side, you find that there are investment managers who are authorized to carry out investment, management in behalf of its client. Those are authorized. So at least they'll be able to do the work for you. In fact, I'll tell you something. This idea of seeking professional advice is very critical. We've had instances whereby, people have made wrong judgments after having a lump sum of money. Okay. I think the immediate one I can recall is the 20%, which our mandatory pension scheme was, giving out. They didn't force anyone, but if one wanted, they could actually go and collect from our mandatory pension scheme, as long as you are contributing and you met the criteria. People rushed. They got. Well, I also got. But I can point where the money is. So I just hope that all of us who got were able to point where the money went, the 20%. Okay? This is where the issue of professional advice comes in. We may know some of the things, but sometimes it's good that we also get advice from other people. Now, what I want us to do is to quickly look at a glance of savings and investments in just a few countries, okay? Now, this data is gotten from the World Bank report, so it is consolidated and it is as at 2021. This is the data that I could find. It's still able to deliver the message, okay? So these countries that have were asked to say in the last 12 months, did you save? Okay. In the past 12 months, did you make any savings? Okay. Then the other question that was asked is the savings that you made, were they through mobile money or an account? Okay. And another question that was asked was, did you also invest in stocks or equity markets? All right. So with these questions, we see that Zambia is not bad. Okay. 50% of the people at least had made savings. Okay. Those were able to. And the use of mobile or accounts was growing. Okay. And that is very true because even FinScope, whose survey was carried out recently, is able to point to the growing of the use of mobile phones, which is good. And then in terms of investment in stocks or equity, what we got is that there's low or limited direct ownership. While it is increasing, it is still low. But interestingly, if you see for South Africa, whose percentage was 62% in terms of people who had saved in the last 12 months, actually the involvement in the purchase of stocks is very, very strong in South Africa compared to all these other countries, Tanzania, Ghana, Zambia, Kenya, and Nigeria. Okay. So with these results, we are able to tell that there is financial literacy and education that is going on consistently, and people are able to appreciate and are able to invest in stocks. Okay, even in Zambia, we're able to appreciate and invest, except that perhaps the growth is not as compared to South Africa. All right, so let's move to our next that's our next PowerPoint presentation, where now we are looking at the retirement investment options. Okay, retirement investment options that we have. So for all of us in attendance, we actually have several investment options. We can start with the mandatory one, the state schemes, one of them being the National Pension Scheme, which we all know. Okay. every employee, every employer, yeah, if you're an entrepreneur or things like that, you still need to make sure that you are able to contribute to the national pension scheme. Okay, so that is mandatory. It affects everyone of us. Then also we have the occupational pension schemes, which are employer-based or are private occupational pension scheme. These are the ones that are managed by the Pensions and Insurance Authority. So these ones, any employer in Zambia can actually open up an additional pension scheme in relation to the mandatory one, which is NAPSA. So the idea here is that the NAPSA benefit alone may not be able to sustain the kind of lifestyle that you are living today, right? So the government thought it prudent enough to have private occupational pension scheme to ensure that the monies that are also coming from the private can augment the funds that are coming from NAPSA, and they should be able to live the lifestyle that you are living when you are in gainful employment. And as you know, when we are growing, we become tired. So you are unable to run around and make ends meet. So you just want to relax, sit, and enjoy. All right. So that is the other pillar which you can make use in terms of retirement investment option. Then we also have personal arrangements, okay? So these personal arrangements, just as the name suggests, they are personal, okay? And they cater across all of us. So for this one, regardless of the kind of work that you're doing, you can still participate in personal arrangements. And still, those people are able to participate under the state pension as well as the occupation pension scheme. You are still able to participate under personal arrangements. All right? So you can actually invest in insurance. You can invest in stocks. You can invest in bonds, mutual funds, unit trust, real estate, you name it, including agriculture. All right. This is supposed to be comprehensive and very practical. We need to be very practical. If you have a home and behind there's just soil, it's not doing anything. Sometimes you may want to buy, for example, paper. Yeah, paper that you use in the kitchen. There's a packet that you can buy in ShopRite, maybe around 40 kwacha, less than 100 kwacha. You go plant, what comes out of that is massive. You can actually grow green and red paper, and just 2 bubbles of paper cost quite high. You get it around 20 kwacha, 25 kwacha. You know, those are abnormal profits. That is some gold sitting behind your yard. Now, that is being very practical. I've done that before and I made good money, right? I had enough grass somewhere. I just thought, let me remove this grass and put something that will be able to give me money. All right. Of course, I left grass somewhere else because I don't want not to be green. I want to make sure that I'm contributing to the greenish of the environment, you know. Yeah. So there are so many things that we can do. Sometimes we don't even need so huge amounts of money for us to start investing. All it needs is a simple start with very small savings, and we'll be able to make a difference. We proceed. So then, in the capital markets, you'll be offered with several products, okay? The capital markets that the Securities and Exchange Commission actually regulates and supervises. So you have stocks, and you have these which are listed on the Lusaka Securities Exchange, okay? So you can actually choose from there. You'll be able to see their movement. And remember, we said we have brokers who are licensed to ensure that they advise the public, those who are interested to buy the shares, and then they will help you throughout. So these are some of the products that you can actually take advantage of and start investing. You don't need to wait when you have so much money, but this is the time. And as you invest when you are young, you'll be able to see as we go on. When you are young, you are able to invest in shares. There's a lot of troughs and crests. And from that, despite the risks, all right,
because whenever there are winners and there are runners-ups,
We are getting feedback.
there are always emotions and opinions. Ladies and gentlemen, I have the final results with myself. It has been a
Okay, let's just hold on. I think our colleagues are just
a
taking note of that.
long run. And finally, we've come to the conclusion of this.
Hello, Sichone, could you help us mute the mic for that person? Okay, Eliya, you can continue.
All right.
Apologies for that.
Okay, thank you so very much. Our colleagues, our audience, we have several programs that are running. We have debates going on in the country. And I think our colleagues are already excited to announce the new winners. I wish you were there, but I think it's better you're here because we have to plan for your tomorrow. We need to know how we can plan for tomorrow and which investment options we can undertake and how possible it is, right? So in the capital market, you also find collective investment schemes. They'll offer you good growth, quite diversified, including other investments. These you can actually take advantage. Of course, bonds. Yeah, everybody's talking about bonds, risk-free. Yeah, a bit debatable, but indeed the risks cannot be compared to these other investments. So very good investments where you can actually walk in, okay? The capital market, you also find different services, the brokerage services that we discussed. And also, you know, the Securities and Exchange Commission, we are cognizant of the fact that you, our colleagues, you can be innovative. And some of the products you may come up with may not be readily available in the market. So we've provided a sandbox innovation, whereby if you have such beautiful innovation, you can come across and we'll be able to give you a platform where you are able to test and see how it works. If it works well, well and good. We'll be able to promote it and, open it to the larger public and be able to save others. So ideas are definitely welcome. This is your capital market. It is your space. We need to make use of it. Now, if you remember, we started by discussing that even small investments, small contributions, they actually make a lot of sense. So I had a very simple example here. When you go and sit down, you can go through. But here we have a $10,000 investment for 10 years at 8%. Now, in terms of compounding, there's one scenario where we are doing compounding yearly and another scenario where we are compounding monthly, okay? So yearly compounding yielded about $21,589, which is less when we are compounding monthly, okay? Because monthly compounding released the result of about 22,080, okay? In short, if you are able to make timely, consistent contributions, regardless of their amount, you'll be able to benefit from the power of monthly compounding. And that is very critical. And now here is another example. Take for instance, here is a colleague who is in college. They are getting their bursaries. They decide to take 50 from their money and invest it, right? Maybe they're just around 20 years old. And here is another colleague who says, well, until I find employment, good. At age 30, they find employment. They are able now to contribute 500 kwacha. The ugly truth for that guy who started late is that their final value will actually be less than the other guy who was actually contributing less, but they started early. Why? Because of the power of compounding. So what we want to emphasize here is that we need to start now. It's never too late. Today may be actually the best day when to start. So let's start investing in these different products. Let's diversify and we'll be able to benefit from the power of compounding. Now, as you do those investments, as you plan for your future, what things do we need to take into account? We want to ensure that we manage some risks, right? We want to manage the purchasing power reduction, the increases in the prices of goods and services. We want to manage that. We also want to manage outliving our savings. And you can imagine what can happen. You invest so well. And because you invested so well, you find that you live longer. Then your savings fail to help you to take care of yourself because you lived so well. You are healthy. Longevity risk. This is real. Our life expectancy is increasing. So we also need to be on it. Make sure that we invest well and ensure that we are able to have enough funds to take care of ourselves. A very quick example, there is one entity who did evaluation, and then the estimation, the estimation was that a certain number of people will be able to die in this period, right? Now, with the advancement in health and people taking walks, exercising, and things like that, having insurance, a peace of mind, and having invested for longer time and planned so well, they lived longer. That entity went into problems because their estimate was not correct, right? So what I'm trying to say here is that these are genuine risks that we need to take into account. You might actually live longer than your savings. So we have to watch out. Market risk, market performance affecting your investments, very, very critical. Health risk. Sometimes there are emergencies that are just so huge. So you want to ensure that you take care of that risk. Sometimes poor decisions could be made regarding your fund. Maybe if you're managing yourself, or even if you are giving it to another person. So there's always a way you can walk around that. Foreign exchange risk, especially if you have invested in foreign currency, you can be faced with that. True, you can take up hedging, do some derivatives for you to ensure that you've taken care of that risk. Also, climate risk, very important. The weather patterns are extreme nowadays. It can be so hot. And imagine if you had planted and your crops withered. That is very dangerous. And imagine that is just one source of your income. So issues to do with hurricanes, wildfire, fires happens in these developed countries. So all these have to be managed to ensure that you are able to ensure that you have your objective being met in terms of your future planning. Now, very quickly, let's look at the step-by-step, because I know in our audience, we have various group age. So for those in their 20s, you also have something to do. You don't need to wait to reach 30. You need to start now. So start saving small so that you can benefit from the power of compounding, which we discussed. Also consider establishing an emergency fund of about 3 to 6 months cover. 3 to 6 months, yes, because this has been tested and research has it that at least it takes 3 to 6 months to find a job if one was to lose their job. So if you are able to take care of your emergency fund, ensure that you plan to cover your costs within 3 to 6 months, then you have a peace of mind and you'll be able to find an alternative with a peace of mind. Then we are also encouraging that if you are not going to be an entrepreneur, which we encourage, then you need to join companies, that are able to take care of yourself, even when you retire. For example, those which already have existing pension schemes. But if they do not have, do not worry, you can always make a change. You can encourage them to open that, and you'll be able to plan for a future and live the way you are living when you're in gainful employment. Also, in their 20s, those guys, you need to invest in growth assets, stocks, mutual funds, ETFs. Do not be afraid. Shares may rise and fall, things like that, but over time, you'll be able to build your wealth. Then also you need to avoid lifestyle debt that reduces future savings. We discussed that. Now, for those in their 30s and 50s, what we are saying is that you need now to strengthen or consolidate and fine-tune your savings. For those in the 30s, you need to build a strong financial foundation, okay? If you have a pension scheme, consider increasing your contributions. Very important, 10 to 15% of your income, that will be good. If you are in your 30s, consider buying a home or investing long-term assets. This is debatable. If you are able to have income, which is able, or maybe you're using just about 10% of that income, maybe to pay your rent, the 90% you are reinvesting, well and good. Sometimes properties or a home can actually, hold the funds that could have gone for investment purposes. So you just need to know how to do your mathematics properly. Maybe this is where financial advisors come in. All right. In your 30s, you also want to ensure that you diversify your portfolio. All right. And also protect your family in terms of life and health insurance, if you have one. Right? Then you also want to ensure that you are reviewing and adjusting your financial goals as time goes by. Children are being born and things like that. So you don't have the same, plan. You need to adjust it accordingly. In your 40s, we are saying that now this is the time to balance the growth and ensure that the stability while managing obligations. All right? Catch up on your contributions if you are behind. Balance your growth and security in terms of investment. You are able to see which investments are performing well, which are not. Sell some shares, buy other shares, and things like that. Also, pay down on your mortgage if you got one in your 30s. Consider reducing the mortgage amount. Then you also want to prioritize your children's education, all right? And this is your retirement wisely. Okay, give the children the education they deserve. That's why there are those insurance policies that you can take as a cover, as well as other investment opportunities on the capital market, which will be able to give very good return to take care of all these needs. Then also here, you also want to ensure that you review the estate plan and the will, which most people fear, but there's nothing to fear really. Okay, in your 50s, now, this is the time to ensure that you are maximizing your readiness for retirement or long-term financial freedom. Okay. If you have a pension scheme, there's obviously NAPSA, there are also obviously private pension schemes. Obviously, you may have had various personal investments and things like that in the capital market. So this is the time for you to maximize those investments that you have. You also want to shift the portfolio gradually to lower risk assets. You don't want to continue being in the shares, okay? Then you also want to consider annuities or guaranteed income products, okay? You also want to just do a retirement readiness check. Just check if things are moving the way they are supposed to move. Remember, this is the time also to reduce the liabilities over time. All right. And in your 60s and beyond, you want to preserve and enjoy. Go to places where we've never been. If you want to, you have the money. You worked hard for it. This is when you finalize the retirement streams. And it is also a rule that you can plan to be getting 4% of the savings that you have made. All right. They'll continue to multiply. All right. You also want to prioritize healthcare and long-term care planning. And you also want to downsize lifestyle if need be. Then just focus on your wealth transfer and legacy. All right. We know our life expectancy. So you don't want to leave things hanging. All right. Then here is a checklist for you so that we can allow a few questions. So on your checklist, you want to ensure that you have budgeting and expense tracking, very critical. As you buy whatever you're buying, you want to make sure you're accounting for each of that item. Through that, you'll be able to make sure that you're able to see where the monies are going, how much is coming in, what is balance is remaining. Emergency savings, you want to have that. Retirement account contributions, you want to ensure that they are maximum. Insurance coverage, general and long term, you want to ensure that you have insurance cover. You don't want unnecessary headaches. Estate planning, wills and trusts, you want to ensure that you have that in place. Then we also want to ensure that you embrace the advancement in technology, mobile and digital solutions. We now have AI. AI is here to stay. We have to make good use of it. All right? Make good use of it and ensure that you are practical. If you are not sure, because it can actually lie to you, seek professional advice. And then you'll be good to go. You also want to ensure that you have periodic financial reviews. That's very, very critical. That's your checklist. And then my call to action as we conclude in terms of securing your financial future, what we are saying is that please start today. It's never too early or late to take control of your financial future. Also, you have to commit to consistent saving and investment that is tailored to your life stage and goals. Then you also want to review and adjust regularly to reflect your changes in income and expenses as well as market conditions. We also want to ensure that we continue acting with informed, proactive steps to building lasting financial independence. And confidently, you will enjoy your retirement years through disciplined planning and flexibility. So thank you very much, colleagues, for your attention. Over to you, Stanley.
Wow. At this point, this is the point, if you had a live audience, you'd say a round of applause for a very beautiful and elaborate presentation. Thank you, Eliya. That was really, really good. Very insightful, I must say. I have learned quite a lot. And it's good that we have your conclusion up there because it's a call to action. And like you've rightly said, some of the key takeaways: start early. It's never too late, as he's mentioned. I also took note of another one where you need to consider insurance, even as you are planning for your retirement. You need to manage your debt wisely. Another one was review and adjust your plan, let it suit you. And then seek professional advice. This is something that we always talk about here at the Commission, where we have to ensure that we're seeking advice from a professional and a licensed individual or entity. Also, the power of compounding. That's also something that I also picked up as a takeaway for today. Thank you so much, Eliya. That was well presented. We'll now take some questions. Okay, I'll get straight into the chat. What I have in the chat from Kapalu Kalulu is that on estate planning, can one make a trust in Zambia as it is in other countries like South Africa? On estate planning. Eliya, we have a question on estate planning saying, can one make a trust?
Okay, thank you so very much. That's a beautiful question. And the simple answer is yes. You can actually make a trust on estate planning. And this is done through Ministry of Lands. You need to seek Ministry of Lands, you do an application. The application nowadays is actually very easy. All right. You need to do some deed. Okay. You just prepare some governance documents where you have the person who is coming up with the trust as well as the beneficiaries. You list the beneficiaries and the conditions, which in fact they already have a draft. So it's as easy as that. We can actually do that.
Okay, great. Thank you so much for that. Kapalu, I hope that answers your question. I don't see any other questions unless I cannot see any other.
Hello?
Hello, is that a question? Is that somebody with a question? Okay, no. So after our presentation, if you have a question, please raise your hand. Okay, I can see a hand from Malcolm Chavala. Our IT at the back, if you could just enable our guests to speak so that they can ask their questions or make their contribution. I'd also urge you to just make use of the chat. If you're unable to speak, clearly we seem to have a challenge today. You can just type your question in the chat. I'll be able to read it out. Okay, so Mvula is asking if we can share the notes on this presentation. We'll definitely share this presentation. We'll send it to the entire database for our town hall. Barbara is also saying a good presentation to you, Eliya. And then another thing she's asking is, the problem is, where do I get this information? I need help. So Eliya, Barbara is asking how she can contact you. So we'll post the link or the address to which you can get information in the chat. We'll get our contacts as the commission, as well as the PIA, what's his contact details.
Yes, yeah. Yeah, that's
Okay.
good.
All right. Then another question is saying, is there any way SEC is protecting those that are not having enough financial muscle to participate in the markets? Okay. When you say protecting, or do you mean, is there any way that we are enabling people to, or rather, are there products in the market that are focusing on small savers? That's how I've understood your question, Chisanga. But correct me if I'm wrong. So we do have collective investment schemes that act as a channel through which one can save if you are a small saver, because they work as a pool. So you're able to save in a collective investment scheme slowly to grow your savings into larger amounts. Okay, another one is from Cindy. Are mutual funds in foreign currency safe to invest in?
Okay. We can take that.
Yes, you sure can.
Yeah. So with investments, the beauty is that you can actually invest in any currency. That's why, if you remember, we discussed on foreign exchange risk, and we said that this will be faced by those who have invested in a foreign denominated currency. So definitely, you can actually invest offshore. And where you invest offshore as an individual, you can also invest in property, you can invest in mutual funds, you can invest in ETF, CIs, including bonds. You can invest in US wherever you want. And you can actually also reduce the risks by using our approved brokers who are able to guide you through this. So definitely, it's an open floor. We want to ensure that we are able to build a stable financial future. Thank you.
Okay, great. So Eliya, you did talk about how to form a trust. So one is asking is, can one hold shares in a trust? What? Can a trust hold shares in a company? And then further to that, Mvula is also asking, I need help on how I can open a trust in terms of companies that do such.
Okay, thank you so very much. So a trust is actually a legal entity. Okay, it has legal persona attributes, and it can actually participate in any other investments. Okay, it is a person despite that it is having several beneficiaries. So in your setup, you'll be able to say what your trust will be able to do. So a trust is able to do so many things. For example, a trust, which is a pension scheme, it gets money from different people who are beneficiaries, and that money is invested in different investment vehicles, including offshore investment outside Zambia. Okay, so these guys, the trusts, they also actually have invested on the listed companies, on most of all the listed companies. So you can actually do anything as a trust. Then the other question in terms of establishing, the process is very simple. It's very simple. It has to pass through Ministry of Lands because that's the custodian for the Lands Perpetual Succession Act. And when you go there, I think they'll easily explain to you. But what we know is that there's actually even a dummy a draft of a trust, which you can go through and see if what is there. Those are the basics. If you just want a basic trust, then you'll be able to just custom make that. But if you want to enhance a little bit, you can actually enhance it. But otherwise, it's very easy. I think you can actually visit Ministry of Lands and you'll be very happy, I think, to help in that manner. Thank you.
Okay, thank you for that response, Eliya. Then we have an interesting one here from Malcolm. Malcolm is asking, how do you protect your retirement in view of black tax? and lifestyle inflation.
Yeah,
Interesting, right? Yeah.
yeah, yeah. You see, what is interesting is that we have obligations. All right,
Mm.
we have obligations as Africans to take care of our relatives, and sometimes, depending on the culture of the family, black tax may not even exist. Okay, but I think it's generally accepted and acknowledged that indeed you need to take care of your family members. So, what is very critical? For example, myself, what I've done is to ensure that my kids receive the education they deserve. Okay, no one is supposed to be left behind. And then all those siblings, those extended family members who need help, if I'm able to, I'm also able to extend a hand when I have, because you can't give what you don't have. First, you need to give yourself, unfortunately, all right? For you to speak properly, you may need to have taken a meal. Now, you can imagine you give your neighbor a meal, you don't have a meal yourself. How are you going to look for more money to take care of the same neighbor? You know, so
Yeah.
it has to start from yourself. Take care of yourself first. Then what remains now is then you can distribute to family members a small percentage, just a small percentage. If there's nothing, don't even worry about it. That's how I take it regarding black tax. Yeah.
Okay, thank you. That's well said. Okay, so there's another one from an anonymous attendee here who's asking, what does it mean to invest in insurance apart from the basic idea that it's a form of saving? So what does it mean to invest in insurance?
Correct. That's a very beautiful question, because ideally, when you invest in insurance, you are actually expecting something. All right. Now, insurance is in two major categories. Okay. There is the general insurance, which deals with short-term insurance, and then there's also long-term insurance, which deals in life or long-term, as it suggests. So now, here is a very good example. You invest in your health insurance, okay? You'll be taken care of. When you are sick, you'll be able to go to the hospital. You use the same insurance. That is an investment, okay? In fact, that is one critical investment, which is very, very important on everything that we have discussed. Because you can imagine, if you do not have health insurance, then you invest so well, you plan so well for your retirement, including financial long-term planning. We are able to see the gold in front of you. Then you are attacked by a very simple disease, let's say malaria, and then you die. Then you realize how critical health is in everything that we are doing, because that's supposed to be the first thing. So health insurance, that is an investment. So if you think it in that way, then you'll see that, wow, then we are speaking. But also, you can actually invest in insurance in terms of maybe motor vehicle insurance, right? Yeah, you get insurance on your motor vehicle. If the vehicle is involved in an accident, then they'll be able to buy the same vehicle, depending on the damage. But also, there is also what we call there are things like endowment policies, where you'll be given a certain benefit in terms of insurance. So it also has an investment component. After a certain period of time, it depends on the policy, how they've crafted it. You'll be able to be paid a certain amount of money after a certain period of time without you having claimed. In South Africa, insurance has quite advanced, and they have kind of policies whereby even motor insurance, if you buy and you do not claim, you'll be given back in cash a certain amount of money. But even here in Zambia, we have whereby you invest in insurance, for example, motor, you do not get a claim, then you receive a non-claim discount. It won't be cash, but it will be a reduced amount to the next insurance which you are going to buy. So in that way, this is now where we are saying that you have invested in insurance because you are getting those rewards, which may either be cash or may not be cash. It may be in kind. Thank you.
Okay, thank you so much, Eliya. I think we'll take our last two questions because we've run out of time. I do take cognizance of the fact that we did start a bit late, so that's how come we've entered into 10 minutes past our usual stopping time. So the last two questions will come from Munsha is asking, what could be some of the benchmarks that one can clearly outline my long-term goals, say, for retirement, with so many uncertainties of life? What could be some of the benchmarks?
All right. Yeah. So in terms of benchmarks, what I want to assume is that maybe as you are planning, for example, you want to see how best are your funds moving. What are you going to compare your funds for you to see that it is actually making sense? So one of them is inflation. Okay. So you want to ensure that you are beating inflation because you want to ensure that your purchasing power is maintained or it is even made better. All right. So usually we'll say inflation plus 3% should be my minimum in terms of the return. So if your investments are able to produce maybe 12.1% inflation plus 4%, maybe it should reach 16%, 20% like that, then you know that you are preserving your purchasing power. Then also some people also take the 3-year or 5-year government bond coupon rate. If you are able to perform above that rate, which the government of Zambia is giving, then you will say your funds are performing well. So those are just some of the benchmarks. But also, another thing that I like is your expenses. Okay. Are your investment returns able to take care of your day-to-day expenses? They may not take the whole lot, but they can actually take a certain percentage. What one of my colleagues has done, he has built several flats. For example, flat 1 gives him so much. He says, this one is for this child. For his child, this other percentage, these other returns, the rental income from these flats, it will go to this child. That's how he has managed. So those are his benchmarks. So the critical issue is to ensure that your costs or your expenses are being taken care of by your returns, and you are also growing your investments.
Okay, great. So the issue on the trust seems to be a very topical issue here. So maybe before we just end, you could just take us through again the procedure of how to apply for a trust at the Ministry of Lands, or what's the procedure just of setting up a trust? It seems to be a topical issue. I've noticed most of the questions are also speaking to the trust, the issue of the trust. Does one need a lawyer? How do they go about it?
Okay, thank you so very much. So you see, a trust is simply a legal arrangement, okay? It is simply a legal arrangement where you have what we call a settler. Okay, so this is a person that is actually creating a trust. Okay, then you also have a trustee. Okay, a trustee can be an individual or even an institution. But in this case, what I want to believe is that individuals want to form a trust. And usually, if it is an individual, you want to make a trust for your home. Okay, so that these intruders who like property grabbing, okay, apart from many other advantages in terms of the investments that you can make as a trust, you want to make sure that these guys do not disadvantage you, because anything that they want to do has to go to court, including the beneficiaries. For example, if you made a trust for your SME, your entrepreneur, your business, if any of the members there become cantankerous and say that I'm going to sell this, they can't sell because it is a trust. It is owned by everyone. So decisions are made collectively. Okay, so there's a settler, there's a trustee, and there are beneficiaries in there. Okay, so you have to decide a purpose. Now, those are the steps. You have to decide the purpose for your trust. What is it going to do? Is it simply about estate planning? Is it about our children, how our properties will be managed and things like that? Because these properties will be the one to take care of the children and things like that. Even in retirement, how will people, the beneficiaries, the family members, how are they going to be benefiting? We don't want them to be fighting when those people who built that trust are no longer there. Okay, that's the first step. You decide the purpose. The second step is to identify the key parties, okay, which we've already talked about. This is a settler, a trustee, as well as a beneficiary, who are most of the time are your children. Then you have to try to draft a trust deed. This is now a legal document that embeds the purpose of the trust and the duties and powers of the trustees, as well as the rights of beneficiaries and the rules of distributing the income or assets that are in that trust. Now, this is where you may need a lawyer, okay? These guys are good at drafting things, so you need advice, okay? We may not be good at all these things, so you need advice. Then these guys will come in and draft a trust deed, or you can actually get one from Ministry of Lands as before you register it, okay? You can get one, you inquire from Ministry of Lands, one of the offices, they should be able to advise you to the trust office. So once you come up with a trust deed, everybody signs. All the members, they will have to sign. It will even have a beautiful name for your family, maybe. Then you go and register that trust, okay? So that trust, there are nice conditions in there. There are issues to say that a property for this trust cannot be sold or it cannot be transferred to one individual unless everybody else sits on one table and agree on the way forward. So that is how that trust will work, okay? So each member will have responsibilities, okay? Which they are supposed to do. And at a quarterly point, they are able to sit and deliberate on the income that has been received and things like that, and how they are going to distribute it. So these are the main steps that are involved. So indeed, when drafting this, you may need professional help. So any of the lawyers, they know these things, they will be able to happily guide you. But if you still have any questions, I think my colleague said that they will be able to post the presentation as well as where we found. We'll be able to help in a way that we can. Thank you so very much.
Okay, thank you so much, Eliya, for the wonderful presentation today. And thank you to our lovely audience. You've been very interactive. We thank you for all the questions, and we hope we've answered or given some solution to some of your concerns and questions that you did post in the chat. We've come to the end of our town hall for today. So today we will be sending you 2 emails. The first email will have the presentation, and the addresses to which you can ask questions and whatnot for SEC as well as for PIA for any questions with regards to today's presentation. Then we're also going to send you another email which will have the survey that I talked about at the beginning of the presentation. So this survey is just to get your feedback on our awareness programs. So please, would urge you all to just give us honest feedback and respond to our survey, because it will help us serve you better. Thank you so much once again, and thank you for joining us. We'll see you again next month for yet another interesting town hall. Good afternoon.
Afternoon, and thank you all.